Alrighty, let's jump into the daily trade recap for Friday, June 30th, last day of the month. Take a quick look at the markets and see what's going on there, and then we'll jump into our results for the day. I got Amazon pulled up on the screen. Amazon, along with just about everything else, was up today, so good up day. He had this previous resistance level in Amazon, broke through, came down, bounced again yesterday, and then went up. But now we have another resistance level. So this has turned into support. This is now resistance at 131.61. We'll see if we can break through that. But Amazon just continues to march its way higher here, slowly pushing forward, still in a squeeze, firing on the weekly. Stochastic momentum is very overbought, but can stay there and sticking up pretty good. So it's stayed overbought for some time. If we're looking over here on the daily charts, that MACD is just a bit weak, but maybe it's reversing today. And you can see squeeze actually firing. So we're in a squeeze right now and potentially firing a positive signal here. Stochastic momentum, nothing crazy. This could easily reverse up. So Amazon looks good. We have a synthetic long on that position, and we actually closed a covered call for a 100% winner today on that. We'll talk about that today. Let's take a look at the rest of the markets out there. So if we look at SPY and what's happening in SPY, if we're looking at the daily charts on SPY, stochastic momentum has been fantastic for days now. We are firing back again, another bullish momentum increase, and MACD potentially reversing positive again on SPY. And today we talked about it the other day, but we had a bullish PSAR reversal signal today on this big move up. So SPY moving up 1.18% today and heading to a new recent high as the market just continues to march higher, getting close to that 3 ATR spot where maybe we get a little overdone, settle back. Who knows? This thing can still run. I think 450 or 4,500 on SPX is definitely the next target for SPY. QQQ almost looks identical, same type of a thing. Got this rounded base in here. If we get any sideways, maybe even a cup and handle potentially starting to work. It's early for that, but you might be starting to get a little bit of the handle piece here. But almost identical. MACD on the weekly is getting a little weaker on tech. And on the daily, still looks pretty good. I mean, there's not a whole lot going on here. PSAR bullish reversal signal today. So bounced off of its 21, bounced off of this former resistance, now support zone. So it's moving higher. And then IWM, taking a look at that. This is getting close to the top of this downtrend line. And if you look at this triangle that we're in, now we've got the bullish end of this thing trying to break through. It's got to break through one of these days. So it's either going up or down. Right now it looks like up, but we came up to this downtrend line and the PSAR reversal signal, and we could not break through it today. And we ended closer to the lows of the day down, or actually up on IWM. Sorry about that. We're up because we gapped up, but we're closing towards the lows of the day on IWM. But everything still looks good. MACD, stochastic momentum, and entering a squeeze. So this could also be on the move. And if you look at some of these sectors in here, everything from XLK all the way to XLF, XLE joining in the fray today. Every single sector that I track was up today. So pretty broad-based rally today. Let's jump into some of the futures. Take a look at what's happening in oil. Here, oil has been in this long downtrend. This downtrend line has not been broken yet. We're still below on the weekly, the downtrend. We're below the 50, the 21, the 200 moving averages. Is this support area here going to hold around 67-ish or so? We're going to see what happens on that. But if we look at the daily, we just keep bouncing off that support, bouncing off that support, bouncing off the support. But we are not making any higher highs. We continue to make some lower lows each time. So this is really important to see, will we break through this 21 EMA green, the 50 EMA in red here, and head back up to get this PSAR signal here and reverse to the upside. But you got a MACD reversal breaking the zero line higher, stochastic momentum moving higher, and then the TTM squeeze. We are in a squeeze. Look how tight this is getting. We're in a squeeze, and the momentum started to reverse higher today. See if oil starts to make any kind of a move here, or we just continue to move sideways. Gold looks pretty identical. It's just been in this downtrend for the short period of time here, a ways away from PSR reversal signal. Has not made any higher highs lately. So the gold just continues to be in this downtrend. We could probably pop in a line here and start to watch this particular line for something to break. So until this line gets broken, there's nothing positive on gold. And I don't see any reason for gold to want to move up if the market's moving up. I mean, why is there going to be any kind of flight to safety in gold? Taking a look at bonds, they're just meandering sideways in this tight range that we've been in since the beginning of the year. Bonds just trading sideways. Nowhere to go. Corn, this is a sore spot today. We took a loss on a 112 trade, which rarely ever happens. But look at what has happened to corn this week alone. I mean, the giant red candle here on the weekly, just a nasty week in corn. We had a nice uptrend going for the last several weeks. I mean, corn was just slowly moving higher, moving higher, moving higher. And maybe, you're going to get some pricing, easing if we get some rains in the plains this weekend. Maybe that's factoring in. There's a couple other reports that are out there on corn, but corn just gapped down heavy on Wednesday, continued Thursday, and then had another horrendous day today. So corn has dropped somewhere in the magnitude of 200 points off of its 680 almost here, 670. That's a pretty substantial drop. You don't normally see that. We saw it back here once, but normally you're not seeing these big drops of corn, just getting really volatile. Probably time to stay away a bit. But how much lower can it go? It's down to where you're right at the 618 fib here. Yeah, you broke through it a tad from this uptrend, but maybe we'll find some support here. We've got a 112 still working on corn. That thing's up 105% right now in 39 days. So that one's great. We did lose one today. Small loss, about 1% of the portfolio, so not a big deal on that. It's because we sized appropriately. Nothing else to take a look at too much here, except we will talk a little bit about our HE lean hogs trade. Hogs just keeps moving and inching its way higher, but our lean hog trade is up 56% in 18 days. That's a 112 trade. No risk to the upside on that. So hogs looking good, even though MACD, TCM squeeze, both showing momentum coming out. It doesn't care. It's still moving higher. On the weekly, though, very strong bullish, breaking out of its range. So got a nice breakout on hog. And then let's take one more look at cattle. And this is where we really took a little bit of a hit today. We aren't at a stop, but we're getting there if this continues. We have a strangle on here, and we've just been marching higher pretty solid this week. So it's a big up move this week in cattle, and you've got MACD breaking positive, stochastic momentum showing positive. You have the squeeze in a squeeze, moving positive momentum, and then the weekly also positive, and stacked EMAs here. It looks like cattle could be going higher, will not be great for our strangle. We really felt that, hey, we were right in the middle when we put this on. We've been in this trade for 4 days. We were right here 4 days ago, smack in the middle of the 3 ATR bands here, right at the, and we just bounced and rocketed off of that. So we'll see what happens in the markets. Let's take a look at the account today, and we'll recap a little bit of what we did in the account. So here in the account today, We did have a loss, 1,076 loss on the day. All of that loss really attributable to our corn futures 112 that we just got beat up on, as we talked about. Still overall for the week, up $1,000 on the week, so not too bad on the account. Looking at the Greeks today, Delta dropped a bit more on this big up move, which is exactly what we anticipate to happen since we are portfolio managers, hedge fund managers here. I'm just looking at the overall account and managing the overall account here, and I'm not really worried about one or two positions here and there. We just want to manage the overall portfolio. So 29, almost perfectly Delta neutral account, slightly positive. Delta doesn't even register barely, 0.01%. Theta remains almost exactly the same. We're at a 0.28, which is where we have been for 4 straight days. Theta not moving at all, which is perfect. In a low vol environment, having a 0.3 theta, fantastic. I absolutely love it. 0.4 is my goal. In most normal environments, this is such a low volatility environment. I will take 0.28, 0.3 all day long on that. And on the net lick here, dropped a tad today, mainly because of that loss on corn. But BP also dropped significantly, because we took the corn 112 off. We've also got a 112 trade expiring that came off today, even though the naked puts are gone. So there's a few things coming off today. And we did put on a new long-term 112 trade today. So that I think is the only add, along with an Amazon new covered call for next week, since we had one expiring today. So BPUs still a little high, but getting out of corn helped it a bit today, dropping down and the market moving up. So 57, I want to get this down. We got to get it down next week. I got to get it to 50. So that's the goal for next week. And if I take a look at today's trades, let's take a look and see what happened. First trade I'll talk about here is this ES trade. This is our ESL long-term 112, the LT112 that we put on back on March 1st. We actually closed the naked puts here for 65 cents a while back. What was that date on that? On 6/2. So we actually closed those naked puts on 6/2. So we've had just a PDS on here, and that put debit spread came off today. So today is just when I'll book this trade. Winning trade, 96.7% premium capture on this, and a 17.6% return on margin in 121 days. And again, that's why we do these long-term 112 trades. If I'm getting 18% over 4 months, 4.5% a month, what else do you want? Perfect. Amazon, the next trade here. This is our covered call against our synthetic long position. That synthetic long, by the way, is now up almost $10,000 on 3 contracts in 93 days. And I'm going to share some other things coming up. So we'll take a look at that. But that trade is doing really, really well. So the Amazon covered call is just going to expire worthless today for another winner. So the 112, we took in 1885 on that one. And then we add the Amazon covered call up over $2,000 on the day. Then a couple losses came in. So we have this put butterfly. This was a hedge trade. Again, it's one of the last hedges I have on. So of course, all the hedges are coming off as we're hitting new recent highs, which is when you really want to start getting hedges on. But we just never got any sell-off that I anticipated. And these hedges are really a drag on the portfolio this month, probably accounting for $3,000-4,000 in losses because I was really hedged. You still have a positive month. That's all good. We're managing again as portfolio managers, as a hedge fund, manager on our accounts. So you got to put that insurance on. It's costly at times. $230 loss on that butterfly. And then the last thing was just this ugly trade here on corn. So corn was actually up to begin the morning, and it looked decent. We were sitting right at the stop. on corn. I ran outside, run a few errands, and within an hour, corn had dropped over 30 points on the day, going past my stop a bit. So I had no choice but to really follow my mechanics here and get out of corn. And a little bit later than I wanted to, I would have gotten out at a little bit better price. And corn did improve a little bit in the afternoon, but not a whole, that I could have taken a little less loss, but you know what, it is what it is. So we lost on this trade $2,900. However, on a $280,000 account, this is barely a 1% loss. So again, if you size properly, you're in great shape on your trade. So there's our dailies. For the month, we were up $3,248, which 1.2% on our account. Not where I wanted to be this month, but I'm going to attribute that mostly to corn today. We also had some hedges come off, and we had a loss on UNH. So those two, UNH loss was about a 1% loss on the account, and the corn trade about another 1% loss. So there's 2%. Had those not happened, I think we'd be up our normal 3% for the month, and we'd be up closer to $6,000 on the month. But hey, you got hedges and 2 losses. It's all good. It is what it is. Can't win them all. But I'll still take the fact that we had another winning week here, so 2 in a row. And really, looking back, we just hardly have any losing weeks anyway. And I'll take $3,200 on the positive on the account, and we'll keep moving forward. All right, if you like this video, go ahead and hit that like button. Go ahead and subscribe. If you're not subscribed, you want to see how I'm trading, go ahead and do that. Hit the notifications so that you see exactly what I'm doing on a daily basis. If you want any more information, drop something in comments. Let me know what you think. Let me know what questions you may have. I try to get to everything that I can in a fairly timely manner. All right. Enjoy a fantastic weekend, everybody. Good trading to you. We did drop a new video on why I like selling options versus buying. If you want, check that option out. If you haven't seen the trade plans, go ahead and look at those videos as well. Have a great weekend. Take care.